Alrighty guys, good morning. Hope you guys are killing it in the markets. There's been so much opportunity. In this video, it's gonna be a quick video. We're gonna talk about a trade that I just entered myself, Aptos, APT. Okay, so I've been looking at this for a while now. There was a better trade entry on this one that I missed primarily because, well, I was on vacation and I also kind of wanted to see how the markets do. And we're kind of seeing the signs now that I'd want to see to start entering positions aggressively and then look to exit if things go wrong. Remember, we're always looking to first establish where we are wrong on our trade idea. So first, let's go ahead and talk about what's going on over here. We have a nice rounded formation over here. You guys can see that we had an aggressive sell-off, right? And then a nice rounded formation that has turned into a nice inverted head and shoulders construction, right? So we can put in a measured move for this breakout of this head and shoulders. Now, people can get a lot more complex with their neckline of the head and shoulders. I like to use a flat horizontal. It keeps me objective. And over here, it's really simple to spot the flat horizontal of a neckline, right? Coming in around $7.84 right over here, this green line. Now, I've been watching this to get in an early position on the daily time frame, okay? Because the real trade, in my opinion, is always on the higher time frames that we will get to in a bit. But this has been respecting the daily horizontal so well, or let me put it this way, the daily time frame has been respecting this horizontal so well that we can use the daily to get in our early position. Now I've been watching this patiently. This morning it closed right above it, and now we're seeing continuation. We took out the previous candle's high as well, so we got a close above it, and now we've taken out the high as well. So this is looking really good, enough for me to start building my position. Now here's the thing, okay? Here's the thing. The way I want to manage this, guys, is that we can't say that we're wrong in this position just because we dip back in here. We cannot, because we'll be actually selling into support. We are only wrong in this position right over here, okay, underneath these levels. So you guys need to position in a way that you can withstand a move back into this head and shoulders construction, because we aren't trading the head and shoulders. The pattern trade is more of a boost for the eventual move, right? What we are trading is the consolidation trend reversing into an uptrend. And if we come in and put in a high low somewhere around here, this trend is still fine. It's still fine. I'm going to show you guys on the higher time frames why it's still fine. We're using the daily time frame more of a booster and an initial position grabber because we don't want this to run away from us, right? So keep in mind that we are wrong on this trade only underneath here. So you guys need to position with that in mind. If you guys are in the Mango C program, use your Mango risk management indicator, use your Mango risk management tool sheet, and position accordingly and position on the higher time frames. Okay, so to summarize what we're talking about here, we have our inverted head and shoulders with our left, our head, and our right shoulder right over here. We are only wrong underneath our right shoulder, okay, underneath $6.75. That's when we are wrong. And because we have an inverted head and shoulders, we can actually draw in a measured move using the length of the head to the neckline. Draw it out right over here. We're going to see that we're coming up to $12.64, which, by the way, has confluence with the key targets on the 4-day time frame coming in at these levels over here. You can see these lower highs, okay? Lower high at $14.50, and over here a lower high at around $13, right? These two inflection points over here, that distribution that broke down, we had like an M-like formation. Let me go ahead and turn on our drawings right over here, and you can see this M-like formation over here. Could also we broke down and initiated this massive bear market for Aptos, right? Well, that is all being undone now with this inverted head and shoulders that we spot on the daily time frame. But to keep your life simple, let's go ahead and delete all our scribbles really quickly. Okay, in fact, we can go ahead and take out this downtrend as well. I want you guys to keep an eye on the Mango indicator, okay, the 4-day time frame. You guys can see that we've been living underneath for the longest time, and now we've reclaimed it somewhere around here. Early positioning would have been all the way back in around November, right? We would have gotten around $6, and we would have been up a good 20% already leading into this breakout, which would have been great. And what I would have really preferred is if we have positioned over here, right, somewhere around here, but we didn't do that, unfortunately. Now, however, that doesn't mean we let the trade go, Okay, but we do need to keep in mind that we need to allow for this trade to come back down to around $7 and still be fine. So you could do one of two things: either position fully around here and say, okay, you know what, if it comes back down, it comes back down, I'm going to sit in the red, or you position partially over here, and then if it comes back down, you can get the rest of your position. It's a trade. Okay, you ask yourself, how much do you like this trade right over here? Okay, are you okay with this running without you having your full position in? Or are you okay saying, you know what, let this run, I'll get a good enough position where I'm happy if it runs, and that way, if it does come back down over here to retest the 4-day dynamic, I can get in a better position and I'm not feeling too much pain. It depends on your trading personality. True breakout traders, true trend traders are going to be like, nope, I like this over here, I'm getting my full position in, and I'm going to go on vacation, I'm going to trade this on the 4-day time frame, and I'm going to manage my position based on that. If it comes down, I'm only exiting if we lose the 4-day dynamic. Okay, so let's go ahead and list out the 4-day dynamic levels for you guys. It's coming at $6.93, the top of the dynamic range, and the bottom of the dynamic range, $6.76. Okay, right over there, note that down: $6.90, $6.70. Just make your life simpler and just use 6.75 as your level. Okay, is that lining up with our daily levels? Let's go ahead and see. Yep, 6.75. So this is why I was telling you guys, you need to be okay with this coming back down over here, because if it comes back down into this range over here and you sell because you think that this pattern trade is invalidated, right, you would be selling into the 4-day dynamic. Okay, now, don't get me wrong. Is it wrong to do that? If you're a pattern trader and you are trading this pattern, okay, is it wrong to do that? No, it's not wrong. It's not wrong, but that needs to be your trade. That's not the trade I am taking. Okay, the trade I'm taking is, hey, I'm using the pattern to get my initial position in, but the 4-day dynamic is the real trade. And since we didn't get to position on it, I'm going to be using the daily time frame to get my initial position. And if we do come back down, if the markets are generous enough, I'll get the rest of my position over there. Failing that, I'm going to get the rest of my position higher at $8.54, right above there, taking out these highs over here. Or maybe if I'm feeling it, depending on what the rest of the markets are doing, if we get this 4-day candle close coming in 2 days and 15 hours, if we take out the previous high and get the 4-day candle close above $7.80, right? Again, 2 days and 15 hours, I gotta wait. We've got to do two things: take out the previous high and then come back down onto the horizontal. I might just say, you know what, I'm seeing the market respect this horizontal. Again, I'm just gonna go ahead and buy the rest of my position over here. Okay, but the initial position is already in. All right, so I think that's pretty much it. I gave you guys invalidation, which is the most important. It's underneath the 4-day dynamic level right over here at $6.75. Initial take profits are going to be right over here at $12.50. That's a good move. That's a good 50% move from the horizontal, right? 64%, 50% from the current price. And yeah, I think this could keep going. We could at the very least test the all-time high candle close on the 4-day time frame, coming around $18 to $20. I like this trade, but it could go wrong. Remember, keep it mango, keep it easy, keep it stress-free. I'll see you guys in the next one. Ciao.